The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 25th. Terrific Tuesday edition for today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, internationally, 727-445-1044. And, of course, if you can't give us a call, you can always send me an email, steve@tfnn.com. And inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on Tango Tuesday, Taco Tuesday as well. Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and of course, let's go check out these markets. So right now we got the Dow. She's trading up 132 points at 21,644. S&P is up 10 at 2479. NASDAQ 100 down 6 points. Russell 2000 up 13. The semiconductors are slightly positive, up 1 point. New York Stock Exchange up 72. Gold is back $3. Silver's up 4 pennies. Light sweet crude up $1.48. I'll lead the charge here to the upside. It is Priceline dollar-wise. Priceline's up $13, about 0.7%. AutoZone is up $11, 2.25%. Chipotle is up $8. McDonald's up 6. Caterpillar up 6. SVB Financial up 6. To the downside, it is the googly one. If that was not trading to the downside, NASDAQ would be screaming to the upside. It's off 30 points, trading out at 968. Domino's Pizza. That's got about a 9% decline, or $18. Waters Corp down 10 buckaroonies. Wab Tech Corp off 8. Regeneron Pharmaceuticals down 8. So we've got plenty to look at. However, what I want to look at is what you want to look at. And that says Fletch inside the Tiger's Den would like to take a look at the energy sector, XLE. Fletch is long from 64. He says the chart looks pretty constructive. And it most certainly does. You know what we like to see at the end of any pattern out here, and you can see a number of A to B equals CD patterns out here, the one that sticks out at us. Actually, it's almost nice to do, well, I was going to put on a weekly. Let me see here on the weekly chart out here. Yeah, that really didn't cut the mustard, so to speak. So we'll just go back to the daily out there. And here on the daily, the A to B equals CD pattern that we're looking at, the one that sticks out to me is the very first one. Looks like this. So we identify our A to B equals CD level. And Fletch, what the energy sector did was it made a 1 to 1.272 A to B equals CD to the downside. Now, the blue lines on the chart out here, let me go ahead and get rid of that. We know that it made that price projection. The blue lines out here, by the way, are the daily profiles that you and I are looking at. And as it was making that 1 to 1.272, as price was getting down to a new bottom of a daily profile, that bottom back there was $63.91. On July 7th, you got a hammer candle. Not you, but the XLE generated a hammer candle. So we know that that indicates to us that the market is trying to hammer out a bottom. Now, it was at the completion of an A to B equals CD down pattern. It was at the bottom of a TAS market profile. That was an area By the way, that got down to a low of 63.29. Fletch is long from 64. That was, in essence, the close of the day. So congrats there. And now what we have here is we have a new daily profile that formed above the prior profile. We haven't seen that really since about April of this year out here. It does indicate to us a change in trend is underway. So you've got that first one, plus you are already trading above that level. Now let's go add some volume characteristics to this. Let's go see what today's volume is behind this chart pattern out here. And we'll see so far about 8.7 million shares going into its previous swing point that had 17. So, we're a little over 3.5 hours into the trading session. So you'd like to see it have more volume. Also, 18 million shares on July 3rd out here. So we're in an area, Fletch, where, it's been battened down before. Doesn't mean that it will this time, but we're trading above daily profiles. We were in those two other swing point areas on July 3rd as well as on July 20th. And that would say that, in essence, you've got a little bit of a consolidation here. So here's what you're really looking for. Let's turn off those profiles. And what you're really looking for, what I'm looking for, by the way, as well, out here, is a break of this consolidation box, this consolidation rectangle, right? And as we take a look at it, if we get above, if we see a close above, we'll call it 66.56. That's going to give us a price projection equal to or greater than, and the equal to is about 69 buckaroonies out here. So all looks pretty well. What you need in order for this to continue moving higher, though, or what you'd like, is you would like to see light sweet crude continue to break the upside, since these two are so closely tied together. And that means that what you and I need to do, Fletch, is go take a look at light sweet crude. So let's pop over and take a look at its daily profiles. Let's go ahead and put up the synthetic contract out here. It may provide the same profile data as the current contract. And as we look at the 60-minute contract out here, that's what we want to see. This thing has already made a 100% move of a move on a 60-minute basis by getting back to the highs at 9 in the morning from July the 20th. In fact, we are trading above those highs, 47.74. Now, this could actually be set up a larger A to B equals CD to the upside. But let's take a break from the 60-minute time frame. Let's look at the 240-minute time frame. This will show the A to B equals CD pattern a whole lot easier. And so now we've got the potential, because the 240-minute chart is trading above its market profile high. And so the potential A to B equals CD pattern suggests that what we would see is light sweet crude head up into the 49 area. Now, let's take that 49 area. Let's move over another time frame. Oh, was that the date? No, that was the daily. Yeah, the daily gives us a 49.49. It's the same A to B equals CD to the upside. And price is trading here. Let me put the daily chart. Price is trading above the top of its box as well. I'll just go ahead and put that A to B equals CD pattern. Sometimes when I explode or I expand the chart up, they go away. But there's the A to B equals CD pattern here. So by trading above a daily level of resistance, that says it wants higher out here. So that's nice. And in the case of the weekly chart, suggests that where price is headed to is 48.36 to 49.38. So at this stage of the game, I'd say look at 49.38 as the next area of resistance, and 49.13, 49.38. And if you get above 49.38, well, that will turn into a very nice piece of information for being long the energy sector, XLE. That, folks, was brought to you by Fletch and the Tiger's Den. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th. The next wild, wild west of computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and The Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade Charts. Don't miss out on the next wild, wild west of computing as it premieres July 26th for all subscribers to Dave White Services. For all the details and to sign up today, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we've got a dinner that is long Berkshire Hathaway, BRK.B. So let's go take a look at this equity. Now, this is, if we take a look at this little blank chart out here, what we can see is that it's dealing with a level of resistance today. Now, the way that you and I know that this is resistance is because of these three candles that formed right here, July 3rd, July 5th, and July 6th. That set up a nice little three-river evening star. Now, that candle's named after Oda Nobunaga. We used to have an Oda Nobunaga inside the Tiger's Den, and so one of the three great generals from in Japan. There was also another bearish engulfing signal out here. That took place on June 20th. That said that the high of those two sessions, in this case here, it was June 19th, was also resistance. So what we know here, initials SAT inside the Tiger's Den, is that this area that we are trading in right now, 171.95 to 172.70, is an important level for price to close above. If price closes above that, that then provides us with a message that price should run up to the next area of resistance, which in this case here would really be the swing point from March the 2nd. Now, there's also a secondary pattern that could be out here. That would be the fulfillment of a breaking above a swing point or a B point, July 3rd. And that's going to be kind of hard to really measure the volume because it was a holiday or holiday time frame. And that had 2.5 million. You're up there right now with 1.7. Nonetheless, it does look like if this volume continues that you'll be above that swing point with more than 2.5 million shares, 2.493 to be exact. Now, that would give you a secondary price target here. That would, well, it will if I can actually, come on. Oh, you got to hit the right button. That's the old hit the right button routine out here. This gives us a price projection, believe it or not, takes you really right back to the 177.66 area, and the actual top of the swing point is 177.86. So, SAT. If, in fact, Berkshire Hathaway can close above 172.70 today, price is headed to 177.66. Thanks for asking. We've also got a question that came in by email from James. James is T is reporting earnings today. I'm not in the stock, but I'm wondering what you think about it in general. If you think it will eat on earnings, EAT. I don't know. It's sent from an iPhone, and that could be one of the wonderful technologies that Apple has created, which is correct what it was you were trying to say, because it probably wasn't. Maybe beat on earnings, right? There you go. Thank you, Mr. Bill. Yeah, it's great to have wing men and wing women out there. So beat on earnings. So let's go take a look at AT&T. Let's try to figure out. Let's go try to figure out what this thing is doing. The first question was, what do I think? And what I think is this thing is at the all the way traded back to the lows of November 2016. So certainly a weaker than market equity. Let's go take a look at just normal. And I do say normal. Looks like there was a hammer candle out here a couple of days ago. Yeah, it's a close call, but that July 19th session, by the way, could, in fact, be a hammer candle. But let's take a look at the volume metrics as the swing point from November 14th was being tested. That had volume of 26 million shares. It was tested with 29. That hurt. You then had another test with 26. That hurt. And today, the low so far has been 36.13, and we got 15 million shares. The preference here would have been, James, whether it will beat on earnings, that I don't know, right? That's a technique of do we cheat them and how. That's really up to that accounting firm as to whether or not they're going to be able to beat on earnings. If they had some good CPAs, good accountants working for them, they can make anything happen. You just have to open up the accrual drawers and make some adjustments there, and sometimes that will help. So I don't know whether they'll beat on earnings, but probably the question is, hey, what will the stock do? Is there any indications? If, in fact, we had seen sellers dry up at a previous swing point, such as November 14th, then what you and I could do is draw a relatively good conclusion that, from a technical standpoint, which is the most fundamental aspect of a stock chart as far as what it's doing, then we would have good reasons to maybe rest on our laurels that, yeah, this thing is forming a bottom. Now, from that standpoint, we don't. If we go turn on our market profiles, we can turn on both weekly. Let's do that first. Weekly, that's no good. That says resistance is way above at 37.78, so no sign of a bottom there. Daily says the same thing. This has to get up above 36.71, preferably 37.04, before this would generate any kind of a buy message. Now let's go change over to the weekly time frame out here. Just get a bigger, larger picture as to what it's doing. Now, on a weekly basis, where you did have a nice bullish reversal signal the week of November 14th, which had 106 million shares, we were coming into it with 115, and last week was 128. So none of those are really good signs out here. We do know that 3610 area has held their support. I think what we do is we look at this and say, for an A to B equals CD down perspective, I would look at the week that began May 15th, which had 118 million shares, and we're through it with 72 million shares. So this one's a toss-up. This one's a toss. What we can do is say, you know what, if it responds poorly, AT&T, and you're trying to buy it, you may be able to get it all the way back at the swing point from August of 2015. And that would be anywhere between the price range of $30.97 to $33.49. So, James, I wish I could provide you with more information than that. I can't. That's the information that the charts say. Why don't you maybe remind me over tomorrow, not today, but tomorrow or the next day, and we can come back and take a look at how did AT&T respond, how did shareholders respond to whatever it was that they put out there. But thanks for writing in. Much appreciated. Tom writes in, good afternoon, Steve. I'll say good afternoon, Tom. I got into UGAS yesterday at 1184, wondering if you think it has some more upside potential. That's trading off of the UNG. So UGAZ, let's put that up on our charts here first. Let's get to certainly because of all of its reverse engineering. Because of all of its reverse splits, you can see kind of a horrible trading vehicle. Almost looks as bad as the UVXY. In this case here, because of all the reverse splits this has, suggests to you at one point in time it actually traded for a price point of 76.81 and a quarter, and right now it's trading at $12. We know that's not the case out there, but nonetheless, certainly this is one of those day-ish trading types of vehicles, and because of that, right? Because of this whole reverse splitting aspect of this triple ETF, we are way better off taking a look at the underlying instrument, or at minimum, taking a look at the UNG. Well, the UNG has had plenty of reverse splitting itself. Look at this. This thing suggests that it was trading at 511 buckaroonies out here, and right now trading at 656. So I take that back. This thing is not looking much better. That leaves us to say, hey, what's inside the UNG? So we got to go figure out what contracts and what percentages are inside of the ETF UNG. We'll try to do that during the break, and we'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, Tom, I was looking to see if I could identify what the portfolio mix was of the UNG. And oddly enough, I couldn't locate that as hard as I tried out there. So that being said, it's really important when we it's important for you. It's important for me in trying to analyze any ETF. What are the underlying instruments inside there? I would guess. Now, I hate to guess that there's more than one contract inside of the UNG. One thing I looked at said that there was 25% of some type of bond holdings inside there as well. Is it? It's not an ETF. Is it ETN? Is that the deal? But here's what we can do, Tom. Here's what we can do. Here's what I suggest we do at this stage here is we just simply go take a look at the current August contract out here. I believe that's the contract that is trading. That's the active contract. And just simply look at its market profile. So the question was, in essence, does this have any more legs? And so I know that you're a short-term trader. So let's start with the short-term chart, meaning the 60-minute chart out here. So on the bullish side, or the bullish case, there has been a brand new box that formed above the prior box. And now what you're looking for is a close above 294. We'll call it 295 out there. If you see that occur, that would be, we'll call it short-term bullish out here. Then we'll go to a next larger time frame, 4 times the time frame, meaning the 240-minute chart out here, although I'm going to change this right now to 120. We're just going to double it, and then we'll double it once more out there. Again, looking at profile. So here, what we can see is that the 2-hour chart has 295 as well as being a resistance zone. So what we know is that this 295 area is going to be very key for you. If you see natural gas contract close above that, then the UGAS and UNG ought to continue to move higher. If not, price can easily pull back into support, which in this case here would be somewhere around 290, 291 would be the first level that I'd be watching, and below that would be about 288. So watch this 294 level. Inside of the daily and the weekly chart out here, I'm not really gathering a whole lot of information. Prices below the bottom of its daily box, not necessarily a good thing. That says that watch 294. How about that? There you go. So above 294, that gives you the 297 area. Above that, all the way back to $3. That's the best that I can do as far as providing you information about either UNG or UGAS or any of the other exchange traded notes or ETFs that may trade off of natural gas. I hope that helps you out. Let me just check the phone lines here, really the email lines. See if there's any other requests out there. It's always good to get to the request. Again, just stick in as these gentlemen did. There we go. We got another show request out here. Show request, radio show request, something like that. That's great. So Phil wants to take a look at FCX. So FCX gapped up 15% today on earning. I have an option position on it, but would like to add an equity position at some point. How would you plan a future entry? What's the red line on FCX? Now, my red line is I can only give you probably yesterday's red line. There's a system problem that I am dealing with, and so it's not displaying today's information. There was something I was doing before I got on the air, and basically I screwed up the rest of my charts out there, and there was just simply no time to, I think I might have this one actually working. But basically, yeah, okay, I do. So let's go take a look at FCX. Now, I spoke too soon. I can give you exactly what it is that you need out here. Now, in the case of Freeport-McMoRan, take a look at that move out here. Now, Freeport-McMoRan, I should have a chart out here that takes a look at Freeport-McMoRan along with the Australian dollar. So the question would be, if you were me, what would you file that under? Australian dollar or FCX? So, or something else. There we go. FCX AUD correlation. So let's go with that one. So just out of curiosity, what's the Australian dollar doing? Oh, well, there you go. So you see, Phil, in trading this equity, it is as much or about the Australian dollar as it is with regard to what the equity is doing. So you've got these foreign currency translations. Much like last week, I apologize, I don't remember who wrote in and who was asking me about the EEM. And we had a trader that was looking to short the emerging markets out there. And all we did was we went over into, I think that's an iShares. We went over to the iShares. We took a look at what was inside it. That went ahead and gave us really all the different countries. And then what sectors basically made that up. And then you were dealing with foreign currency conversion on top of that. So trading the emerging market ETF, even though I know it's the rage of everybody out there on the shows out there, quite frankly, I don't think they know what in the Sam heck they're actually trading. I could make heads or tails of it, but the amount of work and energy that would have to go into it is nowhere near the amount of work and energy that has to go into this one. Trading FCX is easy. You take a look at its stock chart, and you also take a look at what's going on in the currency marketplace, and that's it. You know, in this case here, you can see nice moves that we've seen inside of the currency market, really also assisting in the trade with regard to FCX. Now, back to your specific question, which was where was Stevie's red line out here? So only the September contract. Okay, thanks, Z. So we'll go back and we'll provide Tom with the information to go ahead and take a look at that. The red line, that's really where today's breakout was, 13.12 in essence. So, you know, will this pull back to 13.12? I don't know. Hey, first, good luck on or congrats on your long position, your option trade here. And nice wide-ranging bars. Markets don't end on wide-ranging bars. Prices above resistance out here. That resistance really being the high of April 26th because of that bear sash candle that formed. So that looks like it's about 13.79, give or take a couple of pennies out here. So that you know, that would be a nice area if it were to pull back there. What kind of resistance does this thing have off to the left-hand side? Well, really the resistance, a small gap that formed on February 22nd. And that looks like right around where it's trading right now. So if you continue higher, this says you're going to run, FCX should run all the way back in the $17 area. Its prior swing point from back in January out there. So, you know, nice going on this trade out here. Where else would this pull back to? I don't really know. I mean, I can put up let's go up back here, put up FCX. Oh, that was already up there. Just provide you with daily and weekly profiles. It's probably the last thing that I could provide to you. These are the weekly. Oh, that's not going to help you. That says 1269. I don't have any. There's nothing that I'm looking at that says it's going to pull back there. And you got 1324 on the daily here. So the only thing that I could suggest to you is buy on some type of retracement. I just don't see it in the cards as we're speaking right now, and that was on Freeport McMoran. So back to the UNG. Right? Let's give out the most current, accurate information that we can. Let's switch over into the September contract. Thank you, and provide this data to Tom because it's going to give us it's going to give us different information. See, here on the 293 on that contract is a bit of resistance. We'll finish this off quickly. We come back from this break for Tom to assist him with his UGAZ trade. We'll be right back.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with Taz proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the Taz Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So, Tom, it's pretty key here. The key level you're looking for is going to be 293. Let me make sure I get that right here. The 293 level, 2.935 to be exact, because that'll get us back inside the daily box. That'll get us over the 60-minute time frame. And let me go from 120 to 240. I probably had forgotten to do that last time, but let me do that right now. Change it to 240. See what signal there. Yeah, because then what that would suggest to you and I is a run to the 295 to the $3 area. So that's what you're looking for. What we know right now is prices run into a possible area of support out here, and that's inside the natural gas of September contract, which is the primary holding with inside of the UNG. Yesterday, we had a request that came in after 2 o'clock from James. James wanted to look at Tahoe. And there's nothing prettier than Lake Tahoe. But to this stock chart, there is no Lake Tahoe. If we take a look at it, put this on a long-term chart out here, what we know that James is doing is bottom fishing. Now, there's nothing wrong with bottom fishing. In fact, you can catch some nice grouper. And that's the only way to really catch some nice grouper, I believe, is to do a little bottom fishing. But you got to make sure those grouper don't get snagged underneath, the rocks and things like that they like to hide in. Well, in this case here, if we're going to go grouper fishing, you need to see some kind of sign of strength out here. So we've already identified that there's very few traders in this equity that are in a winning position. What we know is this thing had gapped down with some volume again back here on July the 6th. What you're really looking for in this equity, since it basically looks so horrible, is, and 530 could be a strong level of support. The only reason why we say that is because the center of the box as well as the bottom of the box are the same. But this would need to close above 604 to even provide you or I with any promise. What I suggested to James yesterday is if this thing is finding a bottom, let accumulation go on for a period of time. That could easily be weeks. And weeks could be more than 1 or 2 or 3 weeks. It could be weeks out there. Watch it. Look for a sign of strength. That means a wide-ranging bar with accelerated volume. Don't worry about trying to buy the bottom of this bottom tick out here because we don't have any signals to suggest or to even give you that option as we speak right now. Instead, look for a sign of strength that those folks that have finished their accumulation are getting ready to mark the stock up or trying to go ahead and mark the stock up. And then just simply after that momentum, buy it on the first pullback out here. That is on Tahoe Resources. I don't even know if they're in Lake Tahoe. But whether they are or they aren't, this stock chart basically does not look very good. So let's go take a look at, I think that's it for the email requests out there. So let's go take a look at the markets. You already know what the markets are doing. They are headed higher. How much higher? A lot higher. For a lot longer than most people give them credit for. I'd like it to get on that train out there. All these pullbacks that we see that take place are relatively small. Does that mean that there's not some problem lurking out there? There's always problems lurking out there. But when those problems actually turn into something more solid, then we'll come back and we'll report that to you. But at this stage of the game, that's not what we have. We take a look at the summation index as well as the advanced decline oscillator readings. Oscillator readings, they're all above zero. That's bullish. Does it matter to me that the VIX index is down at 934? No. It can stay down in this $9 area for a long time to come. And all that's telling us is that VIX is low, gives lots of liquidity, tons of liquidity, as you and I have coined it. That means that price can just simply continue to move higher out there. When the bearish message arrives, it'll be clear, it'll be distinct, and then we'll go ahead and act. But at this stage of the game, prices want to continue moving higher. You might say, and what are areas that we'd be watching for an early signal that that's not correct? Well, I'd be looking at the price levels of 59.18 inside of the NQ. If you close below that, that'll get our skirts in a little bit of a tizzy. Right now, that is a nice support level. Inside the ES Mini, it's 24.70. We're trading only 7 points above that, but that's an important 7 points. Inside the Dow was perfect this morning. It moved higher, came back, tested support being 21.522, bounced off of it like a trampoline. Now, what it's not telling us is this a counter trend rally? Is this trying to set up the Dow, that is, trying to set up an A to B equals CD to the downside? And the Dow does have some problems out here, and those problems are trying to take out resistance. Yes, we saw a spike higher. What we have seen out here over the past course of over the past 2, 4, 6, 7, over the past 7 days has been a struggle. We know where the sellers are lined up inside the Dow equity futures contract. It's clear. We've seen 2 evening stars, so 2 Oda Nobunaga's kind of back to back, suggesting to us that is strong resistance. Now, you might say, well, where is that strong resistance at? It's easier for me to get that off of one of these charts here. So let's go and put this. Let's just put the YMU7 out here. Let me turn off the profiles that are going to form out here. And this way we give you the exact number, because we know that those evening star formations, they just tell us that there's plenty of sellers that are lined up out there. And we'll use the highest one that we've got. It looks like, let's see, the high on 21,621 or 21,624. We're going with the 624. So that's a level to be watching today inside the Dow Equity Futures contract, because a close above 21,624, where 21,600 will tell us that the bears have given up they've been given up defending their front line, so to speak, and they just simply are going to pull back. And pull back to where? I don't know per se inside the Dow equity futures contracts. If we go take a look at, let's just do this. Let's go take a look at the Dow horizontal trading range boundary lines. Give me a moment to go ahead and pull that one up on our screen. And this is going to be one single chart. It's going to have both the weekly and the monthly horizontal level. So this says to you and I, when the Dow equity futures contract gets above the number that I provided to you. This is a weekly chart, by the way, that we're looking at. There's not anything bearish on a weekly chart for the Dow, by the way. The bearishness is so far below that we're not even going to go there. But what this suggests to you and I is, where is the Dow headed to? And the answer is 22,851 before it really sees its next sign of resistance. That is when the equity futures contract clears its resistance zone. Will it do this? Will it make its way up there? The answer is yes. Will it make it above that? The answer is yes. It most certainly will. You're going to see these markets continue to move higher. And until we see some clear signal that that's not the case, that is the only well, you can draw any conclusion you want. That's the only conclusion I'm going to draw, because that's the conclusion that the chart signals are generating for both you and I. So right now the Dow's up 138, S&P is up 10, NDX 100. If we take a look at the Q, it's just curious. What is the volume inside of the QQQ series ETF? 15 million shares. Light volume, no big deal. Steve Rhodes, TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 134 right now. If we take a look at the top 5 holdings inside of the NDX 100, from a weighting standpoint, they represent, I think, 38 or so percent. You've got Apple at nearly 10%, Microsoft. So the second weighting would be Google, between the two stock holdings out there at 9.15%. Then you'd have Microsoft, Amazon, and Facebook out there. And Google is trading below Stevie's red line, and that says that further retracement could be in store for us. If Google were to close above 960.65, whether it's today or tomorrow, then the retracement would be over. It'd be back in its bullish mode out there. It's Stevie's red line, 960.65. A quick peek at Google out here, GOG. We can see that it's hasn't completely, intraday it most certainly did. Well, traded well below the bottom of its daily box, but 938.61 ought to be a really good level of support for Google, because at 938.61 you're dealing with the bottom of its daily market profile. And if that doesn't work, then you're going to look for a pullback all the way to the 906 area. So at this stage, as a betting man, I'm anticipating that Google is going to pull back in that 938 level. Facebook is going to be out with earnings, I believe, tonight or tomorrow. Is that correct? Soon, that is for sure. And if we take a look at Facebook on this chart here from a daily standpoint and try to figure out, is there any kind of message? There's no bearish signals out here on a daily chart anywhere up near these highs. So there's nothing here. If I pull over my other chart, is price moving higher doing less relative energy? The answer is no, it's not. It was, but it's not anymore. So that has been resolved to the upside. This was yesterday when that was resolved. 162.88 would be a first level of support on any type of retracement, and 158.10 would be the next level. That would be the bottom of, well, really, the next level would be 160.95, and then 158.10. That would be the progression of any kind of retracement. You get below 158.10, and that would spell some type of trouble out here. If I switch the Facebook chart to the weekly time frame, see if there's any kind of weekly signals out here, other than the fact that price is moving higher, doing less relative energy. But as long as price stays above 159.68, no problems there. If we do a little bit of a wave count, just let's see, where do we start it? We'll start it right where we're supposed to, right here the week of November 2016. Well, it's already gotten beyond a seventh wave. So Facebook, from a weekly standpoint, well, it's either in the second, or you'd probably have to put it right here, or I guess, or the fourth out there. But what it's done is gotten past that seventh wave move out there. So Facebook looks very strong. We'll see how they do after the market. But the good thing is for the NDX 100, even with this, even with the retracement that we've seen inside Google, it's still long and strong. Just take a look at, again, the weighted equities inside this inside that ETF. They're all looking very good. All looking very good, trading well above Stevie's red line. That is a key area for us to keep an eye on. So to finish off in the next 30 seconds, I don't know, what is it to go? What is interesting out here, and I'm wondering if we are beginning to see a decoupling. Let's go take a quick peek. That wasn't it. Son of a gun! I thought I had it already. That's okay. It's where is it? Yen gold. There we go. Yen gold. Let's see here, because gold moved a bit. It looked as if perhaps there was a decoupling. We've seen the U.S. Treasuries get back in line with the yen futures out here. That's the middle chart versus the bottom. I don't know. I'm not sure what to make of it just yet, other than to stay focused on each individual chart. And I will say that the metals, gold and silver, are holding up very nicely, considering the weakness that we have seen inside of the yen. Folks, stay tuned. David White's up next. After David, you've got Tom O'Brien from 3 to 5 and Andy Heck to take it on home from 5 to 6. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.